You're welcome back to the program. Now, domestic commodity prices are not relenting. February inflation rate went up to 11.4%, and most economic analysts expect the MPC to leave rates unchanged after today's meeting to spur growth. Now, a research analyst at the financial derivatives company, Damilare Adeshola, joins me now to talk more about the domestic prices. Welcome, Damilare, to the program.
Thank you for having me.
Now, can you give us an update on the domestic commodity prices?
Well, the prices have really been increasing across the board. So from the locally produced products like gari and maize to the ones that we import like basmati rice, we have seen an increase in prices. And while this has been partly due to the forex restrictions, it also has been cost push. So from things like fuel scarcity, the recurring fuel scarcity has caused the transport cost of suppliers and traders to increase, and so they have pushed this on to translate into higher prices. And then also we have seen, like in talking more regional to like Lagos with the Mile 12 incident, we saw that traders were having to go as far as Ota and Oyo to source for different products, and so obviously that increased the prices. So that has really just been what is going on. There has been an increase in prices across the board.
Now, anytime from now, the governor of the central bank, Mr. Godwin Emefiele, will announce the decision of the Monetary Policy Committee on interest rate. Now, with the February inflation rate at a double digit, what direction do you think that the interest rate would take?
Well, as you mentioned, they will be considering the inflation rate that is currently at about 11.4, but then also they would also consider the GDP growth, the real GDP growth of Q4, which was 2.1, the lowest in 17 years. So once they look at these things side by side, we predict that they will keep the interest rates as they are, because while one of their assignments, one of their duties is to maintain price stability, is also to spur growth. And so when they maintain the interest rates as it is, we expect that economic activity will be boosted because of lending to the real sector. So we expect that they will maintain interest rates.
All right, thank you so much, Damilare Adeshola, research analyst with the Financial Derivatives Company Limited. Now, let's track the FMDQ OTC Securities Exchange for today's debt market trading. I'm being joined by the head fixed income dealing from Diamond Bank, Ada Mbachu. Good afternoon, Ada.
Good afternoon.
Welcome to the program. Now, what comparisons can you make between the opening market yields for today and the current yields, both in the bond and the treasury bills markets?
Okay, the market opened with mixed feelings today, with so much skepticism due to the upcoming MPC. We saw movement in yield. We experienced bearish movement towards the close of trade, which caused the yield to move high. We recorded about a average of 10 basis movement in the bond space, while on the treasury bill space, we had about 45 basis movement at the short end of the curve and about 100 basis points at the long end of the curve.
All right, thank you so much, Ada, for your inputs there. Ada Mbachu is the head fixed income trading at Diamond Bank. On that note, we've come to the end of Business Incorporated. Many thanks for watching. We do appreciate your time with us. I am Bolaji Akinwale. Bye for now.